Hello, everyone. I'm Simo, your equity research analyst from Investment Research. Today, we're going to take a detailed look at 5 stocks that have been on the good performance this year. I'll break down the drivers behind their performance, analyze valuation and risks, and give you a clear perspective on whether these stocks are worth considering for your portfolio. Let's jump right in.
First one, Robinhood has delivered a remarkable 402% gain year to date. The growth is largely fueled by its retail trading platform and expanding offerings in cash management and crypto. Transaction volume remains the key driver, so any slowdown in retail trading could materially affect revenue. One positive is the subscription-based Robinhood Gold service, which provides more predictable revenue. However, regulatory scrutiny remains high. The SEC and FINRA continue to examine trading practices, and potential restrictions on order flow could compress margins. From a valuation standpoint, the stock trades at a premium that assumes continued retail enthusiasm, so investors need to weigh optimism against regulatory and execution risks. For those looking to participate, it's important to monitor user engagement metrics and any guidance updates closely. Next, Apploven has surged 319% this year thanks to its strong position in mobile app monetization and programmatic advertising. The company has invested heavily in user acquisition technology, and its in-house game studio continues to produce hits that generate recurring revenue. Margins have been under pressure from rising marketing costs and competition from large tech ad networks. One metric to watch is the ARPU, or average revenue per user, as it directly affects profitability. Another is retention rates for its game titles and ad network partners. Fundamentally, Apploven has room to grow, but execution risk is high, and investors should focus on quarterly updates for ad network expansion and margin recovery. Palantir has increased roughly 318% year to date, driven by government contracts and enterprise adoption of its data analytics platforms. Revenue visibility is strong thanks to multi-year contracts, but profitability remains dependent on controlling operating costs. The company's growth outside government, particularly in commercial clients, is promising but not yet large enough to offset slower adoption in some enterprise sectors. Investors should track contract renewals, client concentration, and gross margin trends. At current levels, PLTR trades at a valuation reflecting high expectations for enterprise AI and analytics adoption. The upside remains, but careful attention to contract execution and cost management is essential. Tapestry, the parent company of Coach, Kate Spade, and Stuart Weitzman, has gained 157% this year. The company benefits from strong brand recognition and resilient consumer demand for luxury and premium goods. Margin expansion has been aided by direct-to-consumer sales and international growth, especially in Asia. Challenges include foreign currency volatility and potential softening of consumer spending in the luxury segment. Investors should monitor same-store sales, gross margins, and the success of new product launches. Valuation appears reasonable relative to peers, and the dividend yield provides additional income support. Overall, TPR is well positioned if global luxury demand remains strong, but it's not immune to economic headwinds. Western Digital has risen 148% year to date. The company benefits from strong demand for data storage solutions driven by cloud computing, AI infrastructure, and enterprise expansion. Inventory management and NAND pricing cycles remain key variables affecting revenue and margins. Recent partnerships with hyperscalers and increased exposure to AI data storage provide long-term growth potential. Investors should watch CapEx guidance, product cycle adoption, and potential margin compression due to NAND price declines. WDC offers exposure to secular growth in data storage, but volatility in memory pricing means earnings can swing materially quarter to quarter. To summarize, Robinhood offers growth but faces regulatory risk. Apploven is scaling fast, but execution matters. Palantir provides contract visibility but trades at high expectations. Tapestry delivers brand stability with exposure to global luxury trends, while Western Digital gives access to secular AI and cloud storage demand with cyclical risks. That's my breakdown for today. Each of these stocks has its own story, strengths, and risks, and understanding those is key to making an informed decision. I'll continue to track performance and provide updates as earnings reports and guidance come in.